to Avoiding the Common Investing Pitfalls. Hi, I'm Jennifer Foster, one of the premier investor coaches of South Florida with SmartPlan Investing. We have offices in Atlanta, Georgia, and in Jupiter, Florida. Before we get started, I want to have a frank, brief conversation about what you're about to discover in the common investing pitfalls. For some, what they're about to hear can be very difficult, and I want you to know it's okay. You might even get a little angry and say, I don't believe this. How can you make this claim? Well, I make this claim because it's backed up by academic research and from various investors who share their stories about how these common investing pitfalls have actually had destructive results in their personal lives. So we don't make these claims lightly. They are backed by evidence. Now, one thing I want you to consider is that you or that somebody that you're paying to handle your investments is doing one or more of these destructive behaviors. Now, I like to tell this story because I think it really helps understanding the difference between a behavior and an impact. So imagine that every day after work you go to the local bar and you have a few drinks. Maybe you have a few too many, but every day you drive home safely and nothing happens. And you do that for years. Go to the pub, have a few drinks, drive home, no problem. And then one day you drive home and bam, you crash into a van full of a family and everyone inside dies. Now, was the behavior any less destructive all the times that you drove back and forth from the pub to home? The behavior had always been destructive. You didn't feel the impact until you hit the van full of a family. So that's the difference between the behavior being destructive and the impact. So as you uncover these common investing pitfalls, please don't confuse when we're talking about behavior and when we're talking about impact, okay? So there will be an opportunity for you to actually dive into seeing, okay, if I have been doing these behaviors, how do I know that the impact is also destructive? There is an opportunity for that, and we call that an MRI. What we do with the MRI is we'll compare what you've been invested in over, like say you held that for 30 years. We'll compare that to a diversified portfolio of 4 different risk levels, and we'll see how risky is your portfolio in comparison to the return that you would have had if you held that portfolio for 30 years. So what happens for the people that we do this analysis for is that they often find that they're taking on more risk than they know they are, or they're taking on more risk for the amount of return that they get. So oftentimes they can end up deciding to dial down their risk and get the same return, or for the same amount of risk they can move to a portfolio where they can up the return and get the return for the amount of risk that they're taking. So a lot of people will measure the success or failure of a portfolio based on if the market has gone up or if their portfolio has gone up. But I'm here to challenge that that is not the measurement of a successful portfolio. So I invite you to watch the rest of the videos of Avoiding the Common Investing Pitfalls and reach out to us, and we would be happy to help you to either attend one of our full sessions on these topics where we show you the academic research, or to do a complimentary MRI report for you. So feel free to watch those videos or give us a call at 561-744-9547 at extension 2, or you can check us out online at smartplaninvesting.com. Thank you and happy exploring.